Hey, what's going on everybody? Welcome back to another video. Today I'm going to talk all about how to calculate your cost per mile. That way you can negotiate the best rate per mile when you're talking to brokers. I'm going to take you guys on a little accounting 101 lesson all about variable cost per unit, fixed expenses, revenue, profit, and how we can use these numbers to know exactly how much money we need to be charging brokers to move their freight. I try to be optimistic, I try to be positive, but man, today was a tough day. One of my trucks broke down in the middle of nowhere in Illinois, 30 minutes away from the shipper. I've been dealing with that all day, but that ties in perfectly to what we're going to be talking about. Repairs and maintenance, fuel, so many expenses, so many costs associated with running this trucking business. We need to know exactly how much we're spending. That way we know how much to negotiate the brokers for a rate per mile so that we can be profitable.
Don't wanna sleep in, cause I got something to prove. I gotta take what I hate and finally make a move. I think of you and
Okay, we are not going to waste any time. We have a lot of things to talk about, a lot of numbers to go over, a lot of equations, a lot of complex formulas. Grab your coffee, grab your pen and paper, start taking notes because this information is extremely valuable. This is how you will make every decision associated with how much to charge brokers, how much to pay your driver, what kind of truck to get, is insurance too expensive. All of these things we're about to talk about are so important. If you're starting your trucking business, if you're a year into your trucking business, 5 years into your trucking business, it doesn't matter. You need to know these numbers. So pay attention and let's get started. I'm going to talk about some basic accounting concepts, and the first thing we're going to talk about is your fixed costs. Fixed costs are expenses that do not change no matter how much your truck produces. No matter how many miles you drive, your fixed costs stay the same. You can see here on the screen, we have 4 general fixed costs. The monthly truck cost, so if you have a loan, however much your loan is for each month. Even if you bought your truck outright with cash, you still want to account for a monthly expense of your truck. For this example, we will use depreciation. According to the IRS, a commercial truck depreciates over 5 years. So in this example, let's just say you bought your truck for $60,000. It doesn't matter if you have a loan. It doesn't matter if you paid cash for your truck. You still want to break up the expense of your truck over 5 years. So $60,000 divided by 60 months, roughly $1,000 per month for your truck. Insurance will not change no matter how much you produce, how many miles you drive. Per truck, a good average number for insurance is about $1,200. I see $800 a month. I see $2,500 a month. I see a wide variety, but for this example, we will just use $1,200 as your monthly insurance cost. Next, I have monthly general expenses. This is just kind of everything else that you might have. A QuickBooks subscription, a DAT subscription, maybe you bought some office supplies, maybe you bought some other miscellaneous supplies. This number can fluctuate wildly, but just generally speaking, let's account for $200 per month. And these are fixed costs. So this is the first part of the equation. Your fixed costs do not change no matter how many miles you drive. Lastly, we have the weekly hotel. So if you're paying your driver, or even if you are driving your truck yourself, more than likely you're going to pay for a hotel. I have $300 there, and that is simply 5 nights times $60 per night for a total of $300. Last thing, I take the monthly cost and divide it by 4 because everything we talk about is going to be based on 1 week. So I actually divide everything by 4.3. I'm not going to get it. I'll get into it because I take 52 weeks divided by 12 months. So on average, there are 4.3 weeks per month. So take 1,000 divided by 4.3, you get 233. Take 1,200 divided by 4.3, you get 279. Take 200 divided by 4.3, you get 47. So if you add up your weekly truck cost, your weekly insurance cost, your weekly general expenses, and your weekly hotel, we get a total weekly fixed cost of $858 That will not change no matter how many miles you drive. That is why this is called a fixed cost. Now we know our fixed cost. Now let's talk about our variable cost. Now this number will change depending on how many miles you drive per week. So we have a few things here. Let me orient you to what's on the screen. These orange numbers up here are numbers that you will manually enter into this formula. These blue numbers down here, these are all numbers based on these orange numbers up top. A few of these things are pretty standard across the board. So for this example, we have the truck driving 2,000 miles every single week. That's pretty close to what I've seen. I've seen 2,500 miles per week. I drive about 2,200 miles per week. It's going to fluctuate between 2,000 and 3,000 miles per week, depending on your dispatcher and how many miles your driver can handle. For this example, we will say the box truck will drive 2,000 miles per week. How much do you pay for 1 gallon of fuel? The national average right now for diesel is about $4. It's going to fluctuate depending on the region. The Southeast is a little cheaper. The West Coast, more expensive, but the national average is $4 a gallon. What's your truck's miles per gallon? On average, box trucks, from what I've seen, get anywhere from 6 to 8 miles per gallon, so we'll use 7 miles per gallon. How much do you pay your driver per mile? Now, if you are an owner-operator driving your own truck, don't worry about this. But if you're like me and you want to hire other drivers, you're going to need to account for how much you pay your driver. So I would recommend 45 cents per mile to start out driving a box truck. What is your factoring fee? If you're going to use a factoring company, they're going to charge you anywhere from 3 to 4%. Your dispatch fee, once again, that's going to fluctuate anywhere from 6 to 12%. I'm going to use 4 and 10 just for simplicity purposes. Now, we have here your gas price. How much are you going to pay per week for gas? And that is all dependent on how many miles you drive, the price of 1 gallon, and your truck's miles per gallon. The very simple equation, you take your miles and you divide that by your miles per gallon, and you get how many gallons you're going to use per week, and then you multiply how many gallons your truck will consume by the cost of 1 gallon. So here we have $1,143 per week on fuel. Driver pay, $900, and that is simply based on taking 45 cents times 2,000 miles. The cool thing about this formula is that you can change the number of miles. So if you want to say you're going to drive 1,800 miles, you can change it and the numbers automatically change. If you want to be ambitious and drive 2,500 miles per week, the numbers will automatically change. If any of you want to learn more about how to use this Excel spreadsheet, I have a link in the description below. You can schedule a consultation with me and I will be happy to work through these numbers with you. That way you can plan and make better your box truck business. Weekly maintenance cost. This will also fluctuate depending on the year of your truck. If you have a brand new truck, obviously you will spend less on maintenance. If you have an old truck, I have a 2010 International, my maintenance might be a little bit higher. I think anywhere from 10% to 20% of miles driven is a safe estimate for how much you'll pay in maintenance. Brand new truck, maybe 10%. Old truck, maybe 20%. We'll use 15% as a happy medium. So all you do is take your miles, multiply that by 15%. So 2,000 times 15%. I assume I'll spend $300 per week on maintenance. Next, we have tolls. I'm not quite sure how accurate this is, but it's only $100, so I take 5% of miles driven. If you're driving in New York, New Jersey, obviously tolls much higher. If you're driving in North Dakota, tolls probably a lot lower. So we'll say on average 5% of miles, 2,000 times 5%, $100 per week on tolls. We'll take a rate per mile of $2 per mile, which is pretty close to what I've seen is the average expectation for box trucks. There are loads out there that pay $1.60 a mile. There are loads out there that pay $3 a mile. But on average, let's just assume your rate per mile is $2. With that being said, we can calculate our revenue based on 2,000 miles times $2 per mile gives us $4,000 of weekly revenue. So we'll use that number to determine how much we will pay our dispatcher and our factoring company. $4,000 weekly revenue times 10% gets us $400. We're going to pay our dispatcher every single week. If you're not using a dispatcher, great. Just leave this blank. You can type 0 in your dispatcher fee and it will show $0 paid to your dispatcher. Lastly, factoring fee. 4% of $4,000 is $160. Let's talk about the difference between fixed expenses and variable expenses. Fixed means they don't change. The total fixed cost remains the same no matter what. Your variable cost will change the more miles you drive. The total variable cost will increase. So right now we have $3,000 total variable cost based on 2,000 miles. However, you see down here $1.50. Your variable cost per mile will not change. It will always be $1.50. Even if we drive 5,000 miles, we are still spending $1.50 per mile. But our total variable cost will increase. We'll take 5,000 miles times $1.50, and this is just for an example. Our total variable cost increases to $7,500. We go down to 1,000 miles, and our variable cost decreases down to $1,500. This is just to show you that your variable cost per mile will never change. It will be constant, but your total variable cost will fluctuate with how many miles you drive. That's the big difference between variable cost, fixed cost. Total variable cost changes, total fixed cost does not change. Variable cost per mile does not change. Fixed cost per mile will change. I'll talk about it more on the next slide. Okay, we are almost done. I hope I have not lost you. Now we're going to do kind of a recap of everything we've talked about up until this point. We've gone over fixed cost. We've gone over variable cost. We're still talking about how much money we're spending per week on our box truck. Like I said before, if you want help with this, there's a link in the description below. Schedule a 1-hour consultation with me. I will go over in more detail everything with you, and I will even use your specific numbers, and I'll send you this spreadsheet. That way you can plan your business. The biggest thing that I want to hammer home is that your fixed cost does not change. Your variable cost does change. Let me show you what I mean. Everything is already inputted as a function. All the blue numbers will change as I change the orange numbers. The red numbers down here are just your total fixed cost, your fixed cost per mile. Total variable cost per mile. Up here is your revenue. This weekly revenue is based on your miles driven multiplied by your rate per mile, which is right here. So we can change two things. We can change our rate per mile, and we can change the number of miles we drive. Let me show you what happens whenever we change the number of miles that we drive. So for example, we're driving 2,000 miles per week. Our variable cost is right around $3,000. Our fixed cost is $850. But just for the sake of the conversation, let's increase this to $3,000. Notice how the total variable cost and the total fixed cost are affected. Okay, total fixed cost does not change. Total variable cost does change. Fixed cost per mile actually decreases, and that's the most important concept here. Our fixed cost does not change, but as we drive more miles, as we make more money with our truck every single week, the expense, the fixed cost per mile decreases. So this is a way that you can make more money for your truck without spending more money. The amount of the truck that it costs, the truck cost, the insurance cost, the general expenses will not change no matter how many miles you drive. So if you're trying to make more money, you're better off driving more miles. Or if you can't drive more miles, let's say you're stuck at 2,000. There's nothing you can do. You can't get more than 2,000 miles. What you can do is you can increase your rate per mile by negotiating more with the brokers, making more phone calls, not accepting anything less than $2.20 per mile. Notice here, this increases our total variable cost only a little bit, only because our dispatch fee and our factoring fee is based on our weekly revenue. But if we're able to keep our miles constant at 2,000 and increase our rate per mile, you can already see we're making $400 more, but not really spending any more money because our maintenance is based on miles, our fuel is based on miles, and the amount that we pay our driver is based on 45 cents per mile. So if you're trying to make more money, if you're trying to optimize your business, you need to push your dispatching and your negotiating a little harder, and you need to strive to make $2.20 per mile, $2.40 per mile. That is how you will be able to significantly increase your profit without increasing your expenses. Okay, the moment we've all been waiting for. Now we take everything we've learned in the first 15 minutes of this video and we bring it all together. So what? Why have we been talking about fixed cost, variable cost? What's the big deal? We're going to use this information to plan our business and to know exactly how much rate per mile we need to make in order to be profitable. We're going to use this information to communicate with our dispatcher. We're going to use this information to communicate with our brokers and say, hey, I cannot accept anything less than $2 a mile, and here's why. We already know our fixed cost is right around $850 per week. That's not going anywhere. We know our variable cost is right around $3,000, and that's based on 2,000 miles and $2 a mile. Now, this is the most useful tool that I've created for planning my business. We can enter in here how much profit we want to make per week. So we already know our weekly fixed cost, variable cost. Our weekly revenue is based on our rate per mile and how many miles we drive. Let's just say you, as an owner, you're paying your driver $900 a month, but you want to make $400 a week. Sorry, you're paying your driver $900 a week. You want to make $400 a week as an owner of this business. You're not driving, you're not dispatching, you're just buying the truck, hiring a driver, hiring a dispatcher, and managing the business, and you want to profit $400 per week. With that information, you know you need to charge $2.13 per mile. Now, it gets a little difficult, and there's a slight caveat because there are multiple variables associated with calculating your total cost. There's two things. There's the revenue, the rate per mile, and also the miles driven. So it's not an exact science. So if we change here this rate per mile to $2.13, you can see here that this goes up a couple pennies. But roughly speaking, with this tool, you will be able to enter in how much weekly profit you want to make, and you'll be able to know exactly what rate per mile you need to negotiate with the brokers in order to make that profit. This is for owners who are not driving. If you're an owner-operator, you're driving your truck, congratulations, because you're going to be making $400 plus $900 from the driver pay. So that's a total of $1,300 per week, one box truck as an owner-operator. Now let's say you're feeling ambitious and you want to make $800 per week. You need to charge $2.38 per mile and drive 2,000 miles. Like I said, there's two variables here, the rate per mile and the miles. The higher rate per mile you demand, the more difficult it'll be to get a higher number of miles. There's tons of loads out there paying $1.80, $1.60 per mile, but you're going to have to be a lot more selective if you're going to only accept $2.38 per mile. But at the very least, with all of this information, with all of this knowledge, you're able to plan your business. You're able to know how much to pay your driver. You're able to know how much of a truck can I afford. You're able to negotiate with the brokers, say, hey, I want $2.20 per mile. You're not going to give it to me? That's okay. I'm going to have to call somebody else. If you're dispatching your own truck, you're going to have to make a lot of phone calls. If you're hiring your dispatcher, you need to manage your dispatcher. You need to let him know what your expectation is, what rate per mile you need in order to be profitable.
For the things you know you love, do what you think is right.